Manoj Alimchandani is here. He's an individual investor, HNI investor, and keeps a very close watch on specific parts of the market. Right now in focus are Adani Group of stocks and banking stock. Manoj, thanks very much for joining us on the show today. Manoj, first of all,
thank you very much, Ajay, for giving me opportunity on your top
great.
channel.
Sanjeev, very quickly, if we break down this group of stocks into two, one is the cash-based stocks, the other are F&O stocks. On the one hand, a lot of people are itching to get into some of the names that stocks are falling. Is this the right time to get in? Many of them fear that the stocks may fall further. What are your thoughts? How to approach it logically?
Right. The best way to approach in the time of massive fundraising for India Growth Story is to set the best practices and setting the best benchmarks for top corporates and markets. So this is a good opportunity for engagement with all stakeholders. And what we have seen now, particularly since this month, there has been a moderate correction happening. And also, due to sudden developments recently, there are lots of concerns and markets falling. Maybe FIs are shifting to China, Indonesia, Taiwan because of opening up, but that is temporary. But it gives a good opportunity, and there's a need for top corporates, top business houses to engage with all stakeholders and reach out to them and convey to them the best practices they are doing, the business models, investment models, valuation, new businesses, old businesses, cash flows. So anybody can easily understand the great opportunity available for growth in the Indian markets and also participate in the fastest growing economy in the world.
What about banks? Because a lot of banks got rattled because of course, there were a lot of clarifications coming in that the exposure is manageable. CLSA, Jefferies, all of them put out commentary regarding this Adani Group exposure, PSU and private. Where do you see more value within the banks, which are coming down because of this issue?
Yeah, you look at it, the exposure of banks is just less than a percentage of exposure. The top banks are lending to the groups, and the group is known for wealth creation with a great consistent track record and also well-rotated instruments. It's not only in Indian banks, but the global top institutions want to share in the pie on lending, and the banks are getting good NIMs in the for lending, and even the international bondholders are getting very good yields. So this is an opportunity, and the way the bank stocks have been falling is basically total miscommunication which has happened. We have seen ICICI, Axis, HDFC Bank, and even smaller banks, RBL, DCB, Indian Bank come out with the best results. And even some of the banks to which the group has no exposure, they are also falling because of a lack of communication. This is the time for the company and is board to engage with the fund managers, mutual funds, insurance companies, wealth managers, and explain to them the business models. Is it happening? Yes or no? Apparently no. There is only one sell report. Normally the practice is there are over 500 research houses, and another leading business house in similar business of green energy has buy ratings by over 250 research analysts, and often they have a 5 to 10%, even 20% sell reports.
Right.
Just one sell report is creating so much concern among the media community. Does one need to spend sleepless nights on it? Apparently no. There are over 500 research houses. How many have coverage? Why cannot coverage be there? What is the need? When we talk to some of the best fund managers and corporates, family offices, they are looking forward to opportunities. They want to understand the business models, valuation models, investment models, the values of green energy business, defense business, airport business, road business. There is huge value. But unless they get sufficient data, how do they cover it?
You're making a very valid point out there that many of these banks are coming under pressure, which actually have no relation. In fact, there's immense value in the banking space, and the earnings which you are referring to have been very strong in many of these spaces. So banks is an area of interest. So investors should approach it that way, looking at the earnings quality and also whether the exposure is there or not. All right, let's take a short break on that note.